What's up, guys? Mr. Fit to Flourish, and today I wanted to talk about the most important chart patterns and candlestick formations in general, everything on the chart that you need to understand when reading price action. So this goes aside from EMAs or indicators, RSIs, like all that, tools. So this is purely the price bar. So reading price charts bar by bar, kind of like Al Brooks did. Okay, so reading that book actually changed the way I approached trading and just made me understand trading finally. Because I was just like, what the heck is going on? This stuff is going up, is going down. I don't know. All right, but all right, let's clear everything. All right, we're gonna clear the entire mother freaking chart. Hide everything. Okay, hide your kids, hide your wife, because everybody in here. I'm just kidding. All right, anyway, so just looking at the bars. Okay, how do we read what is going on? Okay, so keep in mind, I do have a video on how to read price action, and I'm not going to go back to that because it went too much in detail. I'm just going to talk about the main stuff that you need to know. So number one, we know that green candles start the time session at the low and then end on the high, and then red bars go from the that top part to the bottom part. So it's basically going down. So red means in that time session price went down. Green means in that time session price went up. One thing we need to understand, the number one thing you need to understand, is little bars are called non-trend bars because they don't contribute to the direction of the trend. Okay, and then big bars are trend bars. They're called trend bars. They contribute to the direction of the trend. That's a major concept you need to understand. Another major concept is when we're creating higher highs and higher lows, that is an uptrend. All right, that is an uptrend. Now, along the lines of big bars, little bars, some bars have wicks. Okay, some bars have wicks. So what does that mean, and how do we read that? So when reading that, so let's look at this green bar. We're in an uptrend. We have this big green bar. The closer a bar is to closing at its high, the stronger that bull bar is. But if it's a bar kind of like, let's see, can we find like this bar here, where we're pushing up, and then it gets pushed back down. So price gets pushed back down, and we essentially close all the way down here. But the wick went as high as up here. Okay, so essentially that's not as strong as if the bar closed close to its high, like this one here. Okay, and then again, like I said, there are things called non-trend bars. These little bars right here that just makes price go sideways. They don't contribute to the direction of the trend. Now, big green bars like this one, they contribute to the upward direction of the trend. All right, what other concept do we need to know? All right, we're going to go back to hiding everything. We need to know something called micro double bottoms. What is a micro double bottom? So it's basically when we hit, we're hitting lows, and then we close at a point and open right at that same exact point. Okay, why is it micro? Because it's right next to each other. It's on adjacent bars. So that's telling me that there's something important about this price level. Buyers and sellers are agreeing that we should not go below that. And it's crazy because we went all the way as low as this level down here, but got bought all the way back up here and then opened right at that same level. Okay, those levels are important because they indicate reversals to the upside. And then micro double tops, I talk about this all the time, is just the opposite. We're going up, 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 and then we close and then open right at that same spot. Notice we have these big topside wicks here, but we end up getting pushed right back down to that same level one time, and then again. Something is important about this level right here, 626.19 on SPY. Okay. Now, the next concept we need to understand about formations, candlesticks, is wicks. Wicks are probably the most important thing that I use when I'm reading price action. When you're in an uptrend and you're at like highs, topside wicks show that sellers are stepping in. Okay, it shows that price is getting too high and people are pushing price back down. Okay, when you're at the bottom of a downtrend and you get bottom side wicks, that shows you buyers are stepping in this area. So big bottom side wick here, big bottom side wick here, buyers are stepping in. The bigger the wick, the more reactive that move is. So for instance, this is a big bottom side wick, which means there's a lot of reactive buyers in this area. And then these top side wicks, they're not that big, but they're still pretty decent size, showing you that we do have sellers in this area. Okay. And then like smaller, like really, really small wicks, no, they kind of don't matter. Okay. It's just showing you, oh, we push back a little bit. All right. But big wicks, yeah, pay attention to massive wicks. All right. All right. And then you have these kind of long-legged dojis where you have big topside wick, big bottom side wick. That kind of shows you there's a little bit of indecision going on in this first trading session. But then notice we get a micro double bottom right here, which kind of tells me, hey, and then we get big bottom side wicks showing me, hey, buyers are stepping in, buyers are stepping in. We don't want to go below this level here. So we're probably going to start trying to go back up. And that's exactly what we did. All right, that's exactly what we did. So those are like the main things that I'm kind of looking at when we're looking at trading. I'm looking at micro double bottoms. I'm looking at the sizes of the bars. Are they big bars or are they just little bars going sideways? And I'm looking for wicks, okay? Looking for wicks. Again, if you just look at those things, you can create astonishingly really good levels by just choosing micro double bottoms on larger time frames like the 2-hour time frame or 4-hour time frame. You could use or the 1-hour time frame. You could use those and determine where a lot of big block orders are or where price is reacting to every time. Okay, so you could just kind of draw it along those levels. Those will be your key levels. And I'm telling you right now, it'll change your life. So these basic concepts to kind of understand about price action are extremely important. This is a shorter video, but understand those things. And I promise you, your trading is going to go absolutely crazy. What's up, guys? It's your boy, Mr. Fit to Flourish. If you like this content when it comes to trading or fitness or just growing in person, feel free to click any of the links in the bio. So we have a link for our Discord for trading, and that trading Discord, we have a free 3-day trial that's going on. But if you're not someone who really likes trading, or if you want to grow as a person in terms of mindset, your finance, your health, wealth, spiritual fitness, and you like that content, we do have a group specifically tailored to helping men grow. That Discord link is in the bio. We have a free section, and then we have a paid section where we go more in detail and do one-on-ones. If you want to do one-on-ones, again, those links have all the things that you want to see. If you want to see more of this content, you like this content, keep liking, subscribing, and doing all that YouTube-y stuff. Check out the Discords down in the links below. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.